Yes, so when we look at the incoming data, we did get sort of an upside surprise in terms of activity in the first quarter, but then the latest data, especially the latest PMIs, do suggest that recovery is likely to be bumpy, especially recovery in terms of foreign demand also looks a bit fragile. And of course, we still have to remember that in terms of fiscal policy, there is some tightening in the pipeline. Monetary policy currently also remains very tight. So there is a lot of uncertainty and risks in terms of the outlook going forward. But so far, in terms of the incoming data, we see that growth is holding up relatively well.
It would not be ideal to get out of one trough to simply go back into another, and that has been a risk on the horizon for some economists. When it comes to the rate cuts and the pathway we're going to see, we're hearing from Pierre Wunsch this morning that the first two are pretty easy to work out. What comes next is going to be more difficult. Do you agree with that, that once you get past the first two rate cuts, you really have to execute wisely around the rest of the rate cuts?
Yes, and that's our baseline, that ECB's approach to the rate cutting cycle will be very cautious. We've penciled in a cut per quarter, and we know that at the moment rates are in restrictive territory, and of course once they deliver a few more cuts, now that's when the discussion around the level of the neutral rate gets more active, and of course there is a lot of uncertainty in terms of estimates of so-called R-star.
Anna, lovely to see you, by the way. Thank you for joining us. In terms of the fiscal problems that most countries around Europe appear to be having at the moment, and it's only going to get worse, and it's the same in the States as well, so it's not a bashing European governments or the UK. How is that going to play on monetary policy thinking? Because at the end of the day, a lot of these governments are going to find it harder and harder to finance at higher and higher levels as well. We might even see a little bit of a need for the TPI, the Transmission Protection Instrument, to come into being as well. Is the fiscal side of things starting to weigh on the monetary?
Well, at the moment, in terms of fiscal position, we are seeing some fiscal tightening. Of course, we've experienced 4 years of very generous fiscal policy, so now it's the time to bring it back a bit. We've penciled in about 0.5% of GDP in terms of fiscal tightening for this year. We think that we could see something similar for next year. And of course, your question alludes to the situation in France and uncertainty around the election outcome and what it might mean for the new French government interaction with the European Commission.
And that's exactly what I'm saying. So thank you for picking up on my nuance there, because they often say generals are fighting the last war, and the last war was a great financial crisis, and the French kind of got away with it then because nobody even challenged them, whilst Italy, Spain, where else did I go on my tour? Oh, I went up to Iceland, but that doesn't count. Ireland, you name it, they all got targeted aggressively. France got away with it, with a very tight spread between Bunds and OATs. Bearing in mind they didn't have to worry about it in the last war. This is all a bit new territory for the OATs and for people holding bonds. Should we be concerned?
When we look at the market, of course, we see that market reaction showed some concern. Actually, yesterday's election outcome was taken somewhat positively by the market. Yeah. We've seen a bit of spread tightening.
Why? I don't Karen did, but I didn't understand that.
Well, it seems that the risks of the far left coalition of parties is now being somewhat priced out. Also, in terms of the rhetoric from the far right party, seems to be toned down a bit in terms of the potential conflicts with the European Commission regarding the fiscal outlook. So it seems that markets took results as a bit of a calm.